Tesla shares continue to collapse in 2025. Today, Monday morning, as I'm recording, shares are down almost 13%. Just an absolutely crazy turnaround for Tesla. Now, Elon Musk being involved in the government, being very close to the president, was supposed to be very good for the company. That was the thought when the election happened in November. Stock basically doubled over the next couple of months. But since he actually went to Washington, shares are down about 50%. I want to dig through exactly what's going on with the stock and why these fundamental problems at Tesla are probably going to get worse in 2025. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the stock move first. This is the stock today, down 13.05%. Just absolutely crazy. If we pull back a year, you can see that shares peaked December 17th. Shares are down 52% since then. Now, I actually took a short position. I'll put a link to that in the show notes, but on January 22nd. So that shares are down about 45%. I own long dated puts. So that's a options position. So those have actually gone up in value. And some of the things that have played out were part of my investment thesis. One of the things that we knew by January was that Tesla was starting to lose market share. This is electric vehicle, the change in electric vehicle sales in 2024, in the fourth quarter of 2024. You can see that Tesla, way over here on the right, they lost market share, actually saw sales decline in the US. That's because their brand had already been damaged in the US. That is also extended to Europe, where they had a decline in sales in 2024 as well. The one bright spot in 2024 was actually China. That has really turned early in 2025. The early data that we've seen so far is that sales are down almost 50% in China, at least in February. So we'll see where the first quarter plays out. But it seems that Tesla is going to see sales decline pretty precipitously early in 2025. And why is that? That's because every one of these competitors has really caught up to Tesla over the past couple of years. These sales actually include plug-in hybrids as well, so take that up with a bit of a grain of salt. Not quite the same product that Tesla is selling, but General Motors is selling full EV vehicles. They are now the number 2 market share, increased their number of sales 38,548 in 2024. You see Honda gained market share, Hyundai, Ford, Toyota, Nissan, even BMW. I'm starting to see a few more electric BMWs out there, which is still a little bit strange that they were that late to the game. And who's losing share? Tesla, Volkswagen, Mercedes-Benz, and Geely. Geely is actually a Chinese brand, so not surprising that they are not doing particularly well here. But you get into the detailed numbers and what we know so far in 2025, and things are looking really, really bad. This is the European numbers. This is from Electric. And what this is showing is a 43.5% decline overall in these countries. But look at Germany. Sales, this is actually where Tesla has their operations, their manufacturing plant in Europe is in Germany. And their sales in the first 2 months of the year down 70.6%. This shows you what kind of brand deterioration Tesla has had. It is partly the competitive dynamics. It is also partly just the fact that Teslas are less popular today. The models are getting older. They have not been refreshed in a big way. I know there's a small refresh that's happening with the Model 3 and also the Model Y, but they're not fundamentally changing the design of those vehicles. It basically looks the same as it did in 2012, the Model S. So it shouldn't be any huge surprise that the company is losing market share to companies that are introducing new, fresh vehicles. People want to be seen in a fresh design vehicle. That's not what Tesla is selling. On top of that, you have all of the political dynamics with Elon Musk. We can't discount that that is impacting the company's operations. And this is actually not new. This is something I've been covering since the start of asymmetric investing on this channel, since late in 2022, when Tesla started to reduce the price of their vehicles. So I'm going to go through a couple of those data points because I think we need a reminder of just how long this deterioration has happened for Tesla. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. You may remember a few years ago, I believe it was 2021, Elon Musk was talking about growing production and deliveries 50% per year for the foreseeable future. Now, that didn't make sense because you just eventually reach the point where you're selling every single vehicle in the world as a Tesla. That wasn't going to happen. But the fact that it wasn't very long after that Tesla had to stop their expansion. They quit building their Mexico plant. They're not at capacity in the US or in Europe. And it seems like that's going to be the case this year as well. So that's going to hurt their financials. But their financials were already in decline. Let's first look at their production and delivery numbers. And you can see that production and deliveries have basically been stagnant for the last year and a half. Over that same period of time, Tesla's margins have dropped like a rock. Tesla basically now has similar margins to what other automakers have. Other automakers typically have a different business model because there is a dealer involved, so they're going to take a little bit of margins. Tesla should have higher margins, both gross margin and operating margin, on a like-for-like basis. But the fact that their margins are down from nearly 30% to around 18% in the most recent year, that is a huge drop. And at the same period of time, Tesla has really taken its focus off of electric vehicles. And maybe remember, the only new vehicle they've introduced in the last 7 or 8 years is the Cybertruck. I think it's pretty easy to say that the Cybertruck has been a complete flop at this point. And the focus has been on FSD and then the Optimus robot. FSD is nowhere near the point where they're going to actually offer a robo-taxi service where they're actually going to be able to fully drive on its own without a driver in the driver's seat. We don't see anywhere in the world today that Tesla is actually operating full self-driving, even with a safety driver, except for on Tesla's properties itself. They are apparently operating without a driver in the vehicle in Austin, on non-public roads, on their own roads. They can do that perfectly legally. And then also in San Francisco as well, it seems like they're doing that. But this is not something that's on public roads. You can't actually take a ride in a Tesla at this point without a driver in the driver's seat. And I don't think there's anywhere near the point where they're going to be able to do that based on the third-party safety data that we currently have. And they're going to have to prove that that's going to be a very safe system if they're going to ever get FSD on the road. I think they're actually behind a lot of competitors. And at the same time, take a look at this. This is Tesla's price to sales multiple compared to a couple of their biggest competitors in the auto industry, Ford and General Motors. Tesla's price to sales multiple is almost 9. Their price to sales multiple, depending on when you're looking at, is going to hover between 0.2 and 0.3. You could also look at their price to earnings multiple. Tesla stock could fall 60, 70%, and it would still trade for a higher price to earnings multiple than either of these companies. And let's keep in mind that Tesla is generating less free cash flow than either of these companies. Yes, both General Motors and Ford, despite everything that's happened with electric vehicles over the past decade, are generating more free cash flow than Tesla. That means they're able to pour more back in their business based on the operations. Tesla could certainly sell shares, but I don't think investors really want that right now. So all of this is pointing to the fact that Tesla is extremely overvalued and its operations are getting worse at a really rapid rate. Now, how low is the stock going to go? I don't know, but it is very possible that it falls another 80, 90% from here. Yes, I said 80 or 90% because automakers, companies that are manufacturing companies, typically don't trade for price to sales multiples near 10 or price to earnings multiples over 100. You're usually going to get those price to sales multiples under 1 and a price to earnings multiple around that 10 range. Tesla has never traded like that, and there's great reasons why, but this is no longer a growth company. Tesla is likely to shrink in the first quarter, and if these trends continue, and I don't see any reason that they're not going to, is probably going to shrink in 2025. What sort of multiple are you going to pay for a manufacturing company that's shrinking, whose brand is deteriorating? I don't know the answer to that, but the market is certainly saying that this is not a company that's worth over $1 trillion anymore, and I think the bottom is going to continue to drop for Tesla stock, but we'll see where this thing plays out. I have certainly built my position in Tesla. I will keep that on for at least a little while now, but let me know what you think about Tesla and Tesla's future. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.